Thank you and welcome to Impact Silver's webinar in explaining and updating our shareholders on the recently announced Plomosa acquisition in Chihuahua, Mexico. I'm Jerry Huang, CFO and IR for Impact Silver. We have President and CEO of Impact Silver, Fred Davidson, on the line here to go over the acquisition and the details of what makes this very exciting for Impact shareholders.
Thank you, Jerry. It is very exciting. There's a bit of history behind this, and probably best to explain it to those who've always thought of us as a pure silver player. On slide 2, we obviously have our standard disclosure, but let me give you the history behind it. We have been, once we've established the Zacualpan operation and district exploration, has spent considerable amount of time looking for something similar in character, i.e. limited production, but lots of potential. And that's what we got when we got Zacualpan. Small mill being operated badly, but a huge district, one of the best mineralized districts in Mexico. Looking around at other epithermal veins, and they're the ones that principally produce silver, there weren't very many that were very attractive. The ones that were available, and the ones that weren't attractive, there was a reason. So the next stage we looked at was what they call CRDs, or carbon replacement deposits. They're the second largest source of silver in Mexico. And very fortunately, we came across this particular target. Its grades historically have been around 60 grams a ton, very similar, if you will, to our Capire project. What wasn't similar to the Capire project is they had extraordinary grades of zinc. And we were talking areas of 13, 14, and in fact, historically up to 22 gram, or 22 pounds, 22% zinc per ton, which is a huge amount of zinc, probably one of the highest grade zinc producers in Mexico, certainly. So this particular one was attractive to us. The current owners were struggling, primarily because the project was undercapitalized. And what appealed to us as well is they did have a resource, and even more so, they've only explored 600 meters of a 6,000 meter structure or strike length. So lots of potential. They have a small mill on site. And let me walk you through the story. But first of all, let's talk about why zinc is so important to us and to you. First of all, there is an acute shortage of zinc coming up and predicted about 2026. The demand for zinc is growing dramatically. The supply of zinc is falling dramatically. And the classic question is, it's a very traditional metal. Why would people be interested? Well, first of all, as this slide on slide 3 indicates, you use 7 tons of zinc just to keep a windmill operation going in the new windmill. So that's a 1 megawatt of installed surfacing. And that gets even higher when the windmill is located near to the sea, or actually in the sea, because obviously you're trying to resist corrosion as well. So there's a use there for power. As importantly, there's a number of other alternatives, and slide 4 is sort of an indication of that. You can see that, in fact, the traditional use of galvanization, and that complements the Build Back Better of the recent structure by Biden in the United States, for construction of bridges, new buildings, derrick rigs. At the same time, we're finding more uses for zinc alloys, including combining with aluminum and copper, increases hardness and intensity. There's casting, covering paint, and interesting enough, batteries. Zinc air batteries are unique in that they produce a constant flow of power before they die, as opposed to declining as you get towards the end of their life. Secondly, they don't burn. So you get around the lithium problem of the fire hazard with lithium batteries. It's it is one of those items that is going to only continue to grow. And we've seen the US Congress designated into green energy and green energy to the economy. And it's now become a designated mineral from the US economic point of view. So number 5, give you an idea of why we're here. We're located in what's probably a corridor, if you will, of CRDs, of very famous CRD production. And you can see the surrounding, this target is primarily in Chihuahua State, but it's the list of who's who in terms of production in this area. Case in point, we've got people like Pinoles, Mag Silver, the Grupo Mexico. It's one after another. This one was actually operated at one stage by ASARCO, and production in the past has been up to 1,000 tons a day. So it's got real potential for operation. The current operation is small. It's got a small mill. You can see a picture of it here. It's capable of 150 to 200 tons a day, but because of, again, undercapitalization, they haven't upgraded it to the point where it can be producing that at the moment. In fact, they're only doing about 79 tons a day in terms of production. We looked at this. We looked at it as an opportunity, and we made an offer, and the total offer is $6 million US for the property, plus a 12% NPI, net profit interest. As we go forward, it's financeable, first of all, out of our working capital, but there will be down the road probably additional capital required. Well, there will certainly be additional capital requirements in infrastructure and services, but we think we can take the current production up to about 150 tons a day, or basically a double, within 6-7 months. It is strictly a function of getting the equipment on site. Underground, there's potential that goes to depth, along strike, up dip and down dip. So it's wide open in all directions of the current mine called Plomosa. Now, it's not the only one there, and that was what makes it really interesting. But let's look at Plomosa itself. Next, the slide would be on slide 6. You can see what there is right at the moment. We have a large land package. There's about 900,000 tons in current resource, both in indicated and inferred. Our intention will be to drill that to a higher designation, but more and more obviously is we're going to continue to test the deposit to all separate directions to expand it as quickly as possible. Basically, they've explored 8% of the entire land package at this moment in time. The state of Chihuahua is friendly. We're close to highway and services. The city of Chihuahua, major city of Mexico, is only a 2-hour drive away. It's fully permitted. It's currently operating, and we have the experienced team that can take charge of this operation, turn it around, improve efficiencies and metrics. Basically, this thing will be accretive within a year. It's going to take some time, but what makes it even more interesting, and I guess slide 7 starts to show that, and that is we can take this and we can expand it. Up to date, locals have produced about $40 million since 2019. Because of the problems of COVID, because of the problems of being undercapitalized, they haven't drilled this project since that period. The current mining method needs a change. Our group can do it. The mill needs improvements. We can do it. We're looking at a resource which has on a tonnage basis, so say 13% roughly in zinc. Ignore the lead, ignore the silver. You look at it at that's roughly 260 pounds of zinc per ton at $1.50 US. And you can see what we're talking about. This is roughly $400 a ton in situ, just on the zinc alone. Add the lead, add the silver, make an adjustment for recoveries, and you're talking about $400 probably at the mill phase. That gives us a unique situation because that means the silver production is free and we can explore for higher grade silver while we're at it. To the north and west of this, about 4 kilometers away, early stage anomalies, rock chip sampling, etc., indicates relatively high grade silver, gold, and copper. So again, this is a thing that has got additional targets for the exploration potential. It's got additional targets for expansion of the current reserves. It's really quite exciting when you look at a mining cost, which is forecast at roughly $100 a ton. So on slide 7, give you an idea, this is a plan view. We're mining the Plomosa mine down to the south here. But you can see the grades of a number of the other mines in the district, those that have been tested. And they're impressive. Historic mining, for instance, running 22% zinc. What makes this thing attractive is that still, a lot of that is still there. It's drill ready for going ahead. Meanwhile, as I say, the historic production has been around 60 grams a ton. And that means that with sorting, like we would do at the Kapiri, you can probably get it up to the 120 grams a ton target. Very, very high grade material to put into your concentrator. And at the same time, we'll be expanding our concentrator. So there'll be a combination of exploration around the current resource, expanding the definition of that resource from just inferred and indicated. We'll be mining that resource, and as we do, we'll be upgrading the quality. We're going to be drilling and targeting a number of these other targets you can see to the northwest here. And at the same time, we're looking at increasing the capacity at the mill and underground. The one thing that's held this back as well is ore is being trucked to surface. We are looking at upgrading a current existing shaft with a hoist, and that hoist will be able to bring additional tons of ore up at a much lower cost than trucking. So there's a number of areas we can save money on this thing, and $100 a ton is not an unrealistic forecast for our mining milling costs. So 6 is where we're going to go, and this is really what we're looking forward to. We're going to start off, once the transaction officially closes, we're going to rebuild the mill. And that could take a little longer only because we've got to source certain material. We think we can expand it somewhat at this point to the 150 tons, maybe even 200 tons a day. That will probably take, although we're sort of saying a quarter, it might take us 6 months for no other reason than some things are hard to source in the current marketplace. We're going to change the mining method underground in terms of how we mine, and that gets a little technical, so I won't get into detail on it. We're going to upgrade the mining fleet because the current fleet is in fairly bad order and needs help. We're going to upgrade the mill. We're going to upgrade the fleet. We're going to also commence exploration to raise the quality of the resource, as I said. We're going to look at the exploration around the immediate resource, but we're also going to commence, as I said, the exploration for other potential in this area, especially when we get a target that's running a number of grams gold and copper to the northwest. And then finally, there's going to be a further program in 2024 to take the capacity up again. So we'll be moving in stages. The first stage will get us to 150 tons. The next stage gets us to 200 tons. And the next stage ultimately is going to be 300 tons with the current resource. If exploration proves, as I'm sure it's going to, that tonnage, and we've already got working models on how to take it up to 500 tons a day. This thing has real potential. And at the same time, we're generating silver at no cost. That's why we're here. Jerry. Give you an idea of where we stand in terms of comparables. You can look at the grade of our zinc. It's amongst the highest grade in the world. Now, we don't have the tonnage yet, but we're going to develop it. And I think that's going to be the one thing that we can look forward to is the exploration and the exploration success, which is going to do nothing more than generate the need for more tonnage, throughput, and in fact, higher valuations. So on 11, we'll give you an idea of the other advantages we have. Slide 11. First of all, there's a lot of other people who claim that they're in this business. Very few of them are in production. We're permitted. We have all the resources we need. We have a local trained workforce. We're going ahead with potential expansion. And very few of the others have such a convenient, low-cost installation already established and ready to go. And as I say, we're currently mining. It's just a matter of expanding that mining. And that's what makes it truly exciting for us. The transaction is hopefully will close approximately first week in April, depending, require a few clearances on a regulatory basis on behalf of the vendors. But at this point in time, we've already got people going onto the property and getting our operations up to speed so we can take this over as we move forward without any further delays. That's why we're here.
Great. Thanks for the overview, Fred. That was excellent. I mean, just to kind of show as well some of the peer groups, as Fred mentioned, many of these companies are solely listed and valued based on just their zinc assets, whereas with Impact, we just acquire the asset and we're really not getting a lot of value for it just yet. So, you know, it really remains to be seen as we get this operation back up and running, what that would mean to the valuation for Impact. So, thank you, Fred, for the overview. Obviously, we have a lot of questions from investors as everyone digests this acquisition and understand the size and implication to Impact. Nonetheless, it seemed to be very positive early on. If you have any further questions or would like to give us a call, 778-887-6489 or inquiries@impactsilver.com would be the best way to reach out to us. Anything else you want to say before we wrap up, Fred?
No, only briefly. It's a very unique opportunity for us. Highly accretive, very low cost. And what makes it particularly interesting is it's got a grade that allows you to sustain yourself virtually no matter what happens to commodity prices. But at the same time, if commodity prices move north, then this thing is going to be very, very successful from everybody's perspective.
Definitely. And just to wrap up, so I mean, it's, as Fred mentioned, this acquisition is only at $6 million US, half cash, half shares, or even we can pay a bit more cash to lessen the dilution to Impact. But with a net present value of over 30 million, over 22 million invested by the previous operator, if you think about it, we're essentially picking it up for at less than 20% of what they put in, right? So it's definitely a good deal, especially with zinc prices the way they are and silver prices stabilizing. On a silver equivalent basis, definitely it would be a very nice increase in terms of our production output per year. So we'll wrap up the webinar. Just a quick update to shareholders. If you have any questions, again, email us or send us a quick note on Instagram or on Twitter.